You know, people tell you that you should invest in ETFs, but at the same time, that is an incredibly broad statement, because if you go to one of the pages of, let's say, Vanguard, iShares, or any of these companies that offer these products, and you take a look at what they offer, there's so many numbers, there's so many confusing things that you don't know, what should I look at? What am I looking at here? How can I orient myself in this space so that I understand exactly what I'm investing in? Well, I want to show you really quickly, if you are, let's say, a regular guy just trying to understand what is inside this ETF and what I should have in mind when investing in it. I'm going to show you really quickly how you can do that. How do you analyze whether or not an ETF or an index fund is appropriate for you and your portfolio? Well, I'm on the iShares by BlackRock product page, and this is their very, very basic S&P 500 index fund. It's UCITS because I'm in the European Union and we have that as a requirement. So that's just a little something to bear in mind. Now, what are we looking at here? Number one, you see the year-to-date return of the fund. So that means from the start of the year, this fund has returned 4%. The first thing you can do is check out the performance. By calendar year, you can see each year how much the fund has returned. And the green one is the return of the fund, while the blue is the return of the benchmark, meaning that the index we are trying to match with this fund is the S&P 500. That's why this is a product offered by BlackRock, which matches that index. And you can see the difference between the returns. If you go to cumulative, you can see the total performance in the last 10, 5 years and since inception. Annualized, you can see the average performance of the last 10 years or the last 5 years. And this is just a chart that's going to show you, if you started in 2010, what happens with your money. So yeah, pretty basic. Now, if we scroll down here, important things to know. Number one, the assets under management, or the AUM. In this case, $77 billion. Why is this important? Well, if you have a fund which has very low assets under management, let's say under 500 million, it could be an issue with liquidity when you try to exit your investments, meaning sell it. If there is not a lot of liquidity, it might be difficult to sell. So we want to ideally be looking at funds which have an assets under management over 500 million. In this case, 77 billion is nothing to worry about. This is one of their biggest funds. Next thing, the expense ratio, 0.07. Also very, very good, very, very low. If you're investing in one of the more alternative funds like the global water or global clean energy funds, those are 0.6, 0.5, much more expensive. So that's something to keep in mind, because this is the fee that you pay every year to be invested in that fund. The type of fund, accumulating versus distributing. This basically means that, is the fund paying out dividends? If it is, it means it's distributing. If it's retaining and reinvesting dividends, it means it is accumulating. In this case, this one is not paying anything, it's reinvesting everything automatically. If we go down here, the important thing to note also here, number of holdings. Obviously, this is the S&P 500, so you have right about 500 companies in here. And you can see which companies those are. If we scroll down, I'll show you a bit later. Price to earnings ratio and price to book value ratio can help you get your bearings in terms of how expensive or how cheap the index is at current levels. Historically, the S&P index has had an average PE ratio of 18. So this is a bit expensive, but you need to bear in mind that in the last 10 years, we've been mostly above 18%. So the average has been higher. As I said, the holdings, you can see here, what are the companies that the index holds and what is the weight of those companies. So you have Microsoft at 7%, Apple at 6.5%, etc., etc., and these are much smaller. Going down here, it will tell you exactly what sector you're exposed to. So in this case, mostly information technology, financials, healthcare, and consumer discretionary. If you take a look at another fund, which I will pull up just now, This is the global fund, meaning that you're investing in the total stock market of the world. And it shows you also geographically, you can see where is the exposure of the fund, meaning that 70% of your investment will be in United States-based companies, and 3% in Canada, and the rest of the world in Europe, France, Germany, United Kingdom, Australia, and quite a bit in Japan. So if a fund has more than one geographical exposure, you will find it here. Okay, going back to the S&P, let's scroll down here and I will show you the listings. Now this is important because you have to know from which exchange are you buying your fund. Obviously, if you live in Mexico, you're going to be buying from the Mexican exchange, or in the Italian exchange if you're Italian, or in the German exchange, etc. It all depends on your jurisdiction and what your tax benefits are. Because for me, I'm in the European Union, so anywhere that I buy from Europe, meaning it doesn't matter if it's Amsterdam or the German exchange, I am pretty much tax-free. So that, of course, depends entirely on your unique situation and where you live, where you're based. That will allow you to know from which exchange you should buy your products. And these are the tickers that you use to find them. And in your platform, it will say on which exchange it is. Okay, so that is pretty much it for how to evaluate your ETFs. Anyway, if you want to learn more about investing, you can check out more about my program, which helps people go from knowing absolutely nothing about investing to doing so and investing independently with their own portfolio and their own strategy. Alternatively, I have made a nice free roadmap which can help you get your bearings on how you can start on your own completely for free, and you can get either of those resources in the description, or just send me a DM and I will send them over to you. Thank you for watching. See you in the next one.